Hello, it's Jacob again, and in this video, we'll be talking about central banking and monetary policy. Now, before we can get into monetary policy, I have to teach you the basics of central banking because it's the central banks that implement the monetary policy. Now, most of you will have some familiarity with the concept of a legislature. Most of you have at least some dim awareness of what's involved when Congress wants to pass a law. But I'd wager that most of you probably have no concept of a central bank, and you may have heard of the Federal Reserve, but it doesn't necessarily mean anything to you any more than any other random government agency would. Well, the short of it is that a central bank is kind of like a banker's bank, or I like to think of it as a bank of banks, in the same sense that some great ancient rulers would call themselves king of kings. The central bank of a nation is a very large bank which serves a very specific function in that it acts as a banker to other private banks. It acts as their lender of last resort, where if they're in deep trouble and they need someone to bail them out with a quick loan, the central bank steps in to save them. It acts as a banker to the government. It acts as a regulator of the financial industry due to its status as the banker's bank. By controlling its own supply of loans, it's able to manipulate financial markets to drive interest rates up or down, to use its sway to pressure banks to do its will. And by extension, since the central bank controls the financial system, the central bank also controls the money supply, and thus it has a large impact on the business cycle. So central banks are very powerful institutions. When economists go into politics, they don't tend to go into the legislature or the executive. Often what you see is lawyers will run for the legislature. Many of your great congressmen are lawyers. Oftentimes it's business leaders and military men who go into executive roles like governor and president. When an economist wants to rule the world, they work for the central bank. Federal Reserve chairman is the, pinnacle of their profession. And yet, despite that, you don't hear all that much about them. Now, where do the central banks come from? They essentially emerge out of the same colonial corporate world that other large corporations did. In the same time period, when nations like the British and the Dutch are creating corporations like the British East India Company and the Dutch East India Company, with the intention of using these companies to support national trade, imperial expansion overseas. Well, monarchs are also creating charters for large corporate banks. See, before that time period, you have moneylenders. You have individual, mom and pops, personal family bank that will give loans to people in their city. You even have larger families that, they have different kin in different cities, and so they're all linked together like a larger firm. And there's also, certain smaller state banks. But what you don't have are the equivalent of like today's Bank of America or of say Wells Fargo or Citibank or, any of those. And back in the day, not just anybody can go and create a corporation. It's something that people had to apply for. They had to petition for a charter from the king. And so they generally had to make a proposal that was framed as being in the public interest. We need the right to have a corporation so that we can do this thing that's going to be good for the country and good for His Majesty. And in particular, what they're going to propose is we will act as your personal bank. Because the king is such a large borrower, it's often very difficult for him to raise enough loans to finance His Majesty's government. Now, as we discussed in the corporations lectures, there are ways around this. Especially in the modern world, one way that governments would do this is through the issue of a bond. Essentially, you go to the public and instead of asking people for a loan, you announce, oh, who wants to give me a loan? And you turn the loan into something that's kind of prepackaged and that can be resold so that people are more inclined to agree to this deal. But another way that they would deal with this issue, how can we finance a government off of debt? Well, another way that they'll do this is they'll give these bankers a right to combine into larger and larger groups. They give them that legal personhood that corporations have, that you collectively can own property. You collectively have a legal personality that you can sue in court and be sued in court. We will treat your bank as though it is a person. And this is the origins of your first very large banking corporations, like, say, the Bank of England, or the Bank of France, or the Reichsbank. And in America, it'll be the Bank of the United States, which does not exist anymore, right? That's the one that Andrew Jackson killed, was later revived briefly, but it's not with us anymore. But this is how your central banks come about. They exist as a sort of collaboration between the government and between the banking elite so that they can more efficiently do business together. Now, in those early days, there is no real sophisticated economic theory. There is no Keynesianism yet. There really, at the start of it, there's no real economics as we know it either. I'm pretty sure that the Bank of England has been around much longer than Adam Smith was. But over time, there came to be this understanding that because the banks had so much power, it wasn't enough just for them to be the king's moneylender or the president's moneylender. They also had to fulfill certain social obligations. One of the first ones that came up was their role as the banker's bank. So in the early days of central banking, the bank would also help to regulate the financial system. It would help to prevent bank runs and bank panics. Oftentimes, bank runs are contagious. When people see that one bank has a bank run, it can inspire bank runs on other banks, even if they are otherwise healthy. So bankers always have an incentive to keep an atmosphere of calm. And by the early 1900s, people had started to recognize that there was such a thing as the business cycle. It was starting to get more and more unpleasant as more people were drawn into the market. A subsistence farmer could, for the most part, ignore the business cycle. If you're growing most of your own food, if you make your own clothes, if you collect your own fuel, then you don't really have you don't really care if the stock market goes down. It doesn't affect your life. But as the world continued to industrialize, as it financialized, as more people became wage workers, working for big companies, the dynamics of the business cycle began to affect the masses in a way that they never did before. And so there begins to be this idea that central banks are responsible not just for their impacts on other banks, but also for their impacts on the economy as a whole. Now, in America, our central bank is called the Federal Reserve. Most every country has one. This just happens to be what we call ours. And it was created in 1913 as a response to the 1907 panic. Now, there's no interesting story behind the 1907 panic. It's just a pretty typical banking panic. But what was atypical was the response to it. This one was especially nasty, even though it was still largely self-contained. And there was a real risk that some large firms were going to go under. But nobody was moving to do anything. And in those days, the government mostly let this stuff, play itself out. So one man, very famous, J.P. Morgan, one of the greatest of the robber barons, makes a move. He invites all of these big business leaders, these bankers, these industrialists, but it's mostly bankers. He invites them all to a sit down in his library up in New York City. Gets them all together in the room, closes the doors on them, locks the doors on them, and tells them, "You're not leaving until you get together a bailout package." A privately funded one. Because there was an understanding that it was in their best interest to save their fellow businessmen so that it would prevent a complete crash of the markets. Now, there are a lot of things you could say about that it was false imprisonment, that's kidnapping. But J.P. Morgan was not the kind of person you said no to. And so by sheer force of will, he convinces this room full of, magnates to go through with it. And they get together a bailout package that brings the panic to a close. But they all agreed that the whole experience was a little unpleasant. Nobody wanted to have to go through that rigmarole again. Nobody wanted to have that uncertainty about whether or not another panic would occur later down the line, or of having to wrangle everyone together in that same manner. And America, for decades at that point, had operated without a central bank, while most of the Western world did. There was a good deal of jealousy. England has this thing, France has this thing, Germany has this thing. Why can't we have one too? And so they decide they're going to need to have a second meeting to lay down a plan for the creation of a new bank. Now, if you know your American history, you know that the second time, we tried to create a central bank. It was very contentious. There was a common perception, more or less correct, among the public, that such an institution would essentially act as a scam. It would be a way for the government, for the rich, to collude with each other and rig markets to make the rich richer at the expense of the poor. This was the main source of Andrew Jackson's concern about it. It was something that people felt so strongly over that they would fight gun duels over it. Well, the American public hadn't gotten particularly more friendly to the idea. And Morgan knew that if he gets all the bankers together in a room to try to bring this thing back, it might spark a backlash. People might freak out over the idea of a bunch of rich men having a meeting to plot how to control the economy, how to control society. And so he says, well, if the idea of a banker cabal having a meeting is going to freak the public out, I'll just have a secret banker cabal. Because that's so much better, right? as long as it remains a secret. And so they hold their party down at a place called Jekyll Island, South Carolina. Now, many of you, you know, are going to be South Carolinians, you students watching this. Some of you may have been to this place. It was essentially a big Gilded Age resort, a place for Yankee carpetbaggers to come down and live it up in the late 1800s, early 1900s. Well, the bankers, what they do is they give each other code names. They board different trains at different locations, sealed trains, keep the windows shut. It's like some James Bond shit. Everyone's pretending to be someone else. And they all, travel separately. They have cover stories to throw the media off their trail. Say, oh, yeah, JP Morgan's golfing over there. Mr. Vanderbilt is he's out, riding his horse. And then they all gather together at this one place, take a boat ride over to the island, and that way they get smuggled in without the media noticing. And while there, they hold their conference, and this conference ends up turning into the basic sketch of what will be the Federal Reserve. And the meeting became absolute legend in the world of conspiracy theories, because the whole idea of it, that some of your richest men in the country are gathering together in secret to make plots about how to rig things, that sounds like some Freemason Illuminati stuff. Now, what they came up with was this. The Federal Reserve was going to be a mixture of private and public. Now, out in conspiracy land, you'll run across people who claim that the Federal Reserve is a private corporation. They'll claim that it's unconstitutional. You get these really bombastic, frothing at the mouth conspiracy idiots who are absolutely convinced that this is a plot to enslave mankind. There actually is a famous book with a title, something to that effect. I'm going to pull it up. Yeah, A History of Central Banking and the Enslavement of Mankind by Stephen Goodson. And all of it is a bunch of nonsense, but there is a grain of truth to it. See, the Fed is a mixture of private and public, because at the top, this is going to get really complicated. All right, I'm going back up a second. The Federal Reserve, it has essentially a structure that is kind of like a federal republic itself. Imagine it as being a republic of bankers in the same way that a corporation is a republic of stockholders. It's going to be divided into 12 regional banks, and then you can think of this as being the state level. And then at the top, it's going to have a board of governors, and you can think of that as being the federal level. Now, at the top, the United States president will appoint and Congress will approve governors. And these governors can be removed, but there's a very difficult procedure to go through to do it. Now, if you know anything about your Supreme Court, you can think of this as being a lot like the Supreme Court. The whole point of our independent judiciary is that even though the president picks the justices, he does still have to get Congress to accept the justices, and then he can't remove the justices. So as a result, you end up with judges who, for the most part, reflect the preferences of whoever appointed them, right? The president is going to appoint judges who, for the most part, agree with him on important issues. But the president can't fire a judge because they do something he doesn't like. And you can see that in the news a bit with things like Trump's judge appointments. Oftentimes, amusingly, the judges that he appointed don't tend to be the very reliable ones. But with Supreme Court judges, they serve for life. Governors in the Federal Reserve don't, but they do have terms. And the president, as a rule, is not going to appoint most of them. It's just set up to rotate in such a way that you end up with the influence of several presidents at any given moment, in the same way that the Supreme Court reflects not just Trump's appointees or Biden's appointees, but they reflect, many different past presidents who have appointed different people. Now, among these governors, the president is also going to appoint, and Congress will approve, a chairman. So think of this guy as being Chief Justice. On the Supreme Court, you've got justices and a Chief Justice. Here you've got governors and a chairman. So that's all top down. That's where the public gets a say. So the public doesn't vote for these people, but the public does vote for the people who pick these people. Just like with, say, any branch of the executive, in any head of any regulatory agency. Now let's talk about the bottom. So at the 12 regional banks, there's going to be 9 directors on their own boards. 6 of them are going to be elected by private banks. Private banks within that region get votes, and they vote for directors, often among their own people, people that have experience working in that industry. And 3 of those directors are going to be appointed by the national board. So it's weighted more heavily in favor of the private side. The private banks get to pick most of the directors, but they still don't get to pick all of the directors. And then the regional board is going to pick its own president from among them. And then finally, the 2 of these meet. So the regional banks do have a lot of their own regional duties. But at the very top level, if you think, well, who runs the Fed? It's going to be run by what's called the Open Market Committee. And the Open Market Committee has all 7 governors, and then it has 5 rotating presidents on it. All of the different regional banks, they all take turns getting to sit on this thing. And these 12 people, they run the show. So, is the Federal Reserve a private corporation? Not exactly. Most of the governance is being done by people who were appointed by elected officials. And even to the extent that there is a private influence on it, it's because the banks are electing officials. But the Federal Reserve is not a for-profit corporation in the same sense that, say, like Bank of America or Wells Fargo would be. In some ways, I suppose you could kind of compare it to a Chamber of Commerce, if you know what those are. Chambers of Commerce are not public. They're not government organizations. They're just organizations that are created by businessmen in a community to promote business in that community, but they're voluntary. Well, the central bank, the Federal Reserve, it's going to have a little bit of that voluntary Chamber of Commerce kind of aspect to it, and then it'll also have a bit of this, more compulsory government aspect to it as well. Now, the important thing is not how many people are on each board or any of the fine details of that. The main thing I want you to take away from this is that the Federal Reserve mimics the structure of the American government as a whole, that it is a federal republic of bankers, and it is a hybrid of public and private control because the bankers are voting for people at the regional level. Now, I want to draw your attention to something. With this map, right, it shows you the territory that each regional bank controls. Well, for the most part, these regional banks are all the same. They don't, it's not like one is more important than the others. But in terms of practical importance, some of them are. New York City, that's your financial capital of the world, right? Used to be London. After America outgrew Britain, it's New York now. So you'll hear about the New York Fed a lot more in the news because you hear about New York a lot more in the news. They might be equals on paper, but when New York moves, when New York takes a step, everyone else feels the trippers. Another similar one would be Atlanta. Atlanta has kind of become the New York of the South in terms of being a major financial center. Dallas in Texas, another big financial hub there. So all three of these, well, let's just say you'll hear a lot more about them in the news than you will like Minneapolis or Kansas City. And I have no idea why this is the case, but a lot of economic statistics are collected and shared with the public through the St. Louis Fed. If you ever want to see good, like, time series data sets on anything, like you want to see, how much capital has been invested in agriculture in Japan, how much inflation is there in Zimbabwe, how much unemployment is there in Tuvalu. All of that stuff you can find at the St. Louis FRED, Federal Reserve Economic Data. It's very usable, and we use it all the time in our own jobs.